Welcome to Own the Chaos. The stock market is crazy and chaotic.
Crash. You son
Oh, God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby. To the moon.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to Own the Chaos. My name is Brad. That is Fat Man Zoom. The stock market is crazy and chaotic. We got tons of headlines to go through, Fat Man Zoom. But before we get into any of that, why don't you hit him up with the starting five?
You got it. Starting five is Lost One, Allen 316, Eric Brands, Oliver Thorpe. And even though he already got booted and he's a troll, he is technically the starting five, and that is our friend Chad H. But anyways, guys, welcome to Stock Watch Sunday. We go live every Sunday at 7:30 p.m. Eastern time, generally talking about the overall market, which is obviously the hot topic and the major point of discussion.
Yeah.
And typically our five stocks we're watching, which it'll be a little bit different today because there's a lot of headlines in the market. There's a lot of questions that we need to discuss.
Yes.
And today is really focused on moving into a bear market. Obviously, we've had some challenges, so I don't want to give everything away, but we're going to talk about sort of the state of the market and, you know, what this week's going to look like, how earnings could have implications on it. I know you guys are already talking about that. But nonetheless, guys, make sure you stick around. I think there's going to be a lot of good content, good headlines, good topics that we're going to discuss. Make sure you hit that thumbs up. We appreciate you guys showing up here on Sunday. But man, we just got to talk football really quick.
What a freaking weekend for football.
Beautiful. It's beautiful. And if Bills can win, which I feel like they have a good chance of winning.
Yes.
I think that's a great four. Maybe not ratings wise, but I think it's a great four. It'll be cool that, correct me if I'm wrong, somebody will have their first Super Bowl, right? Out of all the quarterbacks. 'Cause you got Stafford, Garoppolo, Allen, and Burrow.
Well, somebody would win their first Super Bowl. Garoppolo's been to a Super Bowl before, but
Yeah, they'll have they'll have it.
yeah, in their reach. Yeah.
Well, if you have it, you want it.
For sure. Yeah.
So yeah.
I thought it was crazy. A couple of other stats. First time in 12 years that Aaron Rodgers and Tom Brady will not be in a championship game.
That's wild. That's wild.
Also, I think it was the first time, the first 3 games in the AFC or the divisional rounds, where the game is ended on
a field goal.
In a field goal. Yeah. How crazy would it be if the one that's being played right now would end like that? That'd be crazy.
That would be crazy. I personally want Stafford. I've been on the Stafford train. I think he deserves it. It'd be cool to see it. And it'd be cool to see back-to-back Super Bowls where the host has won the Super Bowl, which had never happened until last year.
Yeah.
So it might happen potentially in back-to-back years if the Rams go and if the Rams win. Which is within reach. So I have no interest in seeing the 49ers go to the Super Bowl. Which Super Bowl did Garoppolo go to?
Chiefs Niners. That was 3 years ago, something like that.
Oh, the one when the Chiefs won.
Yeah.
Okay.
Yeah. That was Patrick Mahomes won MVP that year too.
So that will be really exciting to see how today's game plays out. But you talk about a good mix of quarterbacks. It's going to be really, really fun. Even if Mahomes goes, which is cool, that's fine. I like Mahomes. The last 4 quarterbacks, it's going to be nice. I mean, Garoppolo is kind of the odd man out there, but
I tell you what, though, the end of that game earlier this afternoon, I was like, I literally had just texted you. I don't know if anybody had the same feeling. I was like, if you give Tom Brady this ball back with 2 minutes left, you can't do that.
They did,
and they fumbled it, and they still won. Yeah, that was just crazy.
I mean, that was awesome. And you know, I said this, and I'll keep saying it. Belichick will never win another Super Bowl.
Yeah,
I said this before when everybody was dick riding the Patriots on their 5-game winning streak against trash, but he's never going to win another Super Bowl. Simple as that. And Tom Brady is just showing that. I'm sorry. I'm not saying that like Bill Belichick and their team didn't have anything to do with it, but Tom Brady is the reason for their success. Full stop. Like that's it. He is unbelievable, and he's done the same exact thing with the Buccaneers is it what he did with the Patriots even better.
Are coaches in general overrated, do you?
It depends on the sport. It really depends on the sport. I don't think in football coaches are overrated. I think Belichick is overrated.
Yeah.
And like in a way of like he's one of the great coaches and he runs whatever, but he's overrated in the sense of like they put too much weight on him winning those Super Bowls and not enough weight what we're seeing with Tom Brady. He's different. Aaron Rodgers is the same way.
Yeah.
Like Aaron Rodgers, the way they manage the game is just different. And we've talked about this. The 2-minute drill is the ultimate sort of litmus test for quarterbacks.
Tom Brady is the best.
And Tom Brady's the best at it. I mean, that like you can only coach so much. So head coaches, I think, are overrated. Coordinators are not overrated as far as how they impact the game.
Agreed.
So if a head coach runs an offense or a defense, surely they can have an impact on it. But I feel like the coordinators and the game plan matter most. NBA, I think coaches matter least out of any pro sport.
The trainers are underrated. Shout out, Colin.
Yeah, that's true. I want to get to a couple comments real quick. I like starting out with the comments.
Yeah.
Shout out to Jeff Chow. He said, I think a lot of times the coordinators are underappreciated for sure. That is a bold prediction about Belichick, but he's actually pretty old. So I'm not sure how many years he has left.
He's what, 68, 69, something like that?
I thought he was 70.
Maybe he is.
Maybe it's
right around there.
Oh, no, he's 69. He is
Okay.
69. But yeah, we'll see. But should be fun with football. Keep us updated, guys, because we can't see the football game, but keep us updated if anything happens.
Score. We'll do a score check somewhere in the middle of the stream.
D Nice says Tom Brady will never win a championship again. He don't even need to win another championship.
Nah.
Again.
What else does he have to prove?
Yeah, I mean, he probably has 2 years left in the league, and so 2 years. I don't know. We'll see how many years he has. 2 years.
There was. Did you hear that he was sitting around about leaving? That this might be his last year?
I wouldn't be surprised. I think he leaves just like because there's no reason.
Yeah, I mean, I think he was just trying to make another run, and I don't know if
it's tough to see the Bucks making another run next year, especially if they lose like Todd Bowles.
Yeah,
obviously
Todd Bowles is such a good coordinator.
Yeah, and obviously like some of their offensive weapons.
Right.
So we'll see what happens, but we see. You guys should just have it over when we go play somewhere. All right. As far as stock market comments, I did want to shout out Oliver Thorpe. Couple here. Do you think Microsoft, Apple, Google are hold through earnings or best to swing out now and buy them later? We'll talk about that. We'll talk about just broadly speaking earnings and sort of what that means. But I did want to also look Manuel Alvarez. Earnings will surprise handsomely to the upside. I want to start here. Because how we're starting with the conversation is, we've been blessed since like the dip of March of 2020. We've been blessed with largely a bull market and largely by the dip. You've talked about the trend, which you'll pull up on the chart for the S&P. And 2020 was fairly easy as far as picking stocks and buying dips. 2021 became a little bit more challenging the second half of the year, but overall very bullish and especially if you were in the blue chips. However, things are changing. And so what I'm going to say to you, Manuel, is I'm not sure, like earnings is one of those things where we talk about it may not be enough to just surprise to the upside. I mean, Apple's going to beat, Tesla's going to beat, like these companies, Microsoft, they're going to beat. That's not a surprise.
Yeah.
Now they may blow it out like that. That could be a surprise. But as far as a beat, and even a handily beat may not be enough because there's so many factors. And that's what I wanted to discuss today is we're not technically in a bear market, but it looks like we're moving towards that. And really the question is like, should it be time to start considering shorting the market, or when would you when would you say, hey, I'm now just bearish on the market?
Yeah, if I was going to short the market, it would have been 2-3 weeks ago, right? Like, I think now...
Well, you were bullish on the market 2 or 3 weeks ago.
In the beginning part of January. And granted, I thought that this move was going to happen, but not this soon.
Yeah.
I was thinking more along the lines of like, once we got through some earnings, then we could start to see some moves, or when we got through the first FOMC meeting. But obviously things have happened a lot quicker than I thought that they would. But I did see this move happening. As far as it coming down and going all the way below the 200-day moving average within the matter of 4 days, that's quite a move. I think that there's definitely some room for a bounce here, and bring up Oliver brought up some good points as far as earnings were concerned. And whomever what else was talking about that, but I think that there is I think there's some truth to that. We obviously have the Fed meeting this week, and we'll hear from them, and the market might react to that. There's obviously a lot of other things going on geopolitically. We just heard about the U.S. embassy drawing down from the Ukraine embassy, and I think that there's a lot of factors at play here. So as far as earnings are concerned, I think we might not have seen the whole picture with growth from Netflix, right? That was a huge influence on the market on Friday, was Netflix saying that basically they weren't going to be seeing a similar amount of growth. But we've seen this. Like, Netflix is like that odd one out of FANG. Even though a lot of investors, a lot of analysts include it in the FANG name, it doesn't move or react or even grow like the rest of them. And I think that a very different picture could be painted on the strength of big cap tech this week, and obviously we'll see it happen and unfold as the week goes on.
So we have a 5-day losing streak, which we need to figure out, do we see that extended? We have the potential for a fake out. There's a lot of things that could happen right here.
Yeah.
Over this week and really the next 2 weeks in my mind. But the S&P is off to its worst start since 2016. So at what point do we say, I mean, this is something to actually be concerned about? And so I would say, first off, answer the question of, like, how do you prioritize the things that are going on this week? Because I don't want us to just say Ukraine. Like, I want to actually dig into these headlines.
Yeah.
Like, what is the order of importance as far as like implications on the market of what's happening this week outside of earnings?
The most important thing that's going to influence the market this week, in my opinion, hands down, is going to be the Fed meeting.
Okay, why?
Because we're going to hear from them as to hopefully we'll hear from them about their timeline on rate hikes. Are we going to get a 50-point increase in interest rates? Like, are we going to see that right off the bat? They're going to rip the Band-Aid off? Or are we going to see a gradual growth into interest rate hikes, a 0.25% at a time? And I think that that's what's weighing on a lot of people's minds. How much more are they going to tighten the balance sheets? What's this look like? Is Jerome Powell going to give us some sort of insight on how many hikes we might see? Like, what's his game plan? And I think he's done a really good job at laying out what their plan is. But, getting a gauge from him on just what he's seeing with the markets, what he's seeing with inflation, supply chains, all that's going to matter to him. And we just saw it for 2 weeks in a row now, too. This has been very important to the Fed, that unemployment numbers came in higher than expected for the last 2 weeks. So this could be, maybe he's going to backpedal a little bit. And if he does, then we could see a huge relief rally in the markets if that happens. I think there's a small chance that takes place. I think there's a bigger chance that he starts talking about when they plan to do rate hikes. But again, we'll have to see. But I think that's going to be the biggest influence on the market this week.
Okay, what else? So that's the biggest one. So go ahead and go down.
So then the next one's going to be probably, it's so difficult to figure out what's going to be happening geopolitically, but I think that's probably going to be the next thing, would be this issue with Russia and Ukraine. If you guys haven't seen the headlines, the U.S. Government has requested that all the folks that are at the Ukraine embassy draw down, so they're pulling their people back. It looks as if there might be some inevitability that the Russian government will invade Ukraine, and that creates some issues. It's going to create tension between us and the U.S., between Russia and the UN. China could start getting in the mix there, because we all know that they're kind of, I wouldn't say they're buddies, but they work together. And so there's going to be a lot of issues as far as that's concerned. So you're going to see gold go up, which we're already seeing in futures. We're already seeing oil go up. And I think that those two are going to be heavily influenced on geopolitical issues revolving around what's going on in Russia. So I think, in my opinion, that'll be like the second thing. And then we have earnings that are also going to influence that as well. What are the outlooks going to be? Not necessarily what we just saw in the fourth quarter, But what is big tech? What's Microsoft looking at going into the future here? What's Apple looking at as far as growth is concerned? Is demand waning at all, or is it still just as strong as ever? And that's going to be, I think, the order in which the markets get influenced this week.
That's good. And I think there is obviously there's going to be some eyes on the Fed meeting, and that's going to be very interesting to hear. I'll be honest, I'm concerned about a fake out, because this has the opportunity to go up, but then we could potentially see the following week us just coming crashing back down. Like, just looking at it technically speaking, like, even if we had a green week, I don't know if I would necessarily yet be in a position where I'm like, oh yeah, we're back on track. So it remains to be seen, because I feel like from a retail perspective and how I hear people speaking, that we're still in, like, I worry sometimes, or I wonder sometimes, are we still in this confirmation bias zone where we just say, oh yeah, we'll just turn it around. Like, one day we're not going to be right. One day, like, if we're truly headed for a bear market, because by definition, we're not technically in one, but we're moving towards that, then, not that you need to strike fear, but like playing out the technicals. I mean, you have the chart right there.
Yeah.
That doesn't look good by any stretch of the imagination.
Yeah, but we've seen this before. I mean, here's an example.
We're in March.
No. We've seen it before. This is 2018, right? We saw the move down below. So this is actually a similar move. So you guys look at, if we zoom in here, from about July of 2018 to October of 2018, it first broke below the 50-day moving average, and then we saw this kind of crazy move, and then it just really went down. This is when the Fed was starting to create more rate hikes. They went through 4 rate hikes that year, and this is essentially what happened. We saw a lot of volatility, the flushing out that took place, and then we saw a really nice move in 2019, as we all know, was a banner of a year. We go back.
Let's pause there. Hold on. I think.
Okay.
Where's that move down first start happening? Right there.
This is October of 2018.
Okay, go to left a little bit more to right there.
Yep.
So that's okay. So the beginning of October. You just said we've seen that before. I agree with you. That first move below the 200-day looks exactly like today.
Yeah. But
that move happens over 2.5 months.
Correct.
Okay, so like, I'm not saying overall. I'm just saying,
but that doesn't,
a lot of that's a lot of pain.
That is a lot of pain
for 2.5 months, and you're not breaking even until when? What is that? March? That's 6 months.
Yes. So the market though was green up until December. So on the year, S&P, the SPY was green until December took place, and that's when everything got flushed out. Just to be clear. So there was obviously a lot of volatility leading up to that point, but until the Fed decided to raise rates a 4th time, that's really when the flush out took place.
Yeah.
And we saw a really nice looking bounce. And we saw this before back in 2013. We saw the taper tantrum took place, and there was a lot of volatility there. Fortunately, it kind of similarly to what's happening right now, that a lot of that took place in the beginning of 2013 after the 2008 recession. They started to tighten everything back up. And then, as far as the taper is concerned, they decided to taper the bond purchases then, and then we saw this huge move in 2013. 2013 actually yielded in a really great year despite a lot of that volatility. And I'm not saying that the same thing's going to happen here. So here's current day, right? We're seeing this volatility right now. The SPY broke down below the 200-day moving average. We haven't seen that happen for almost 2 years now. Mm-hmm. And so I think that there is a little bit more pain, but nothing goes straight up. Nothing's going to go straight down. So I think there is some things to be positive about. While it's very easy to just be like, oh, there's so many negative things going on, there's also positive things to consider here as well. Demand is still ridiculous. The economy is doing really well. And none of that seems to be slowing down anytime soon. And so I think that because of that, and the consumer, the buying power in which they have is still very strong. So until that goes away, I don't know if we see like an overall crash, a correction, something that's super healthy. Yes, I think that's very possible and more likely. But this is the first time we've seen the SPY or the S&P oversold in a very long time. So the bounce here could be ferocious, especially if we get some really good earnings from big cap tech and some of the other bigger companies that are reporting. I think we have Boeing reporting this week as well. So there is some influence here that could create a massive bounce maybe before or after the Fed, because again, if the Fed comes in and is a little bit softer than what people are thinking, we could see a huge flurry of buying coming in here, and maybe it comes back into this trend. Who knows?
I think there's three options here. And I think 2018 is the best example, because if we repeat exactly what you showed, which the first part of it looks eerily similar, there's a lot of pain for a lot of people.
Yes.
So, and that's like when we pull it out over years, that's not that big of a deal. But when you're in it 4 months, 6 months,
Yes,
that's a lot of pain and a lot of uncertainty and a lot of, changing strategies.
Yeah.
So all I'm saying is I'm not saying like, hey, we're going to have a crash. I'm just saying, is this like a continuation of a downward trend? Which for me, the three ways I think people could potentially look at this is a dip buy opportunity. I'm going to scoop up whatever I can, and then we're going to just get back in a trend, back in the upward trend, whatever.
Yeah.
You could think that way. The other way you can think is the entire opposite, which is we're going down even further. We're crashing, all the fear, all the stuff, like basically the sky is falling. But then I think there's a middle ground, which is a lot more choppiness, and it's going to take a lot to potentially really move a stock the way it's moved in the past.
Yeah.
So I think more choppiness would be the third option, which I would lean towards. So I'm not saying I think we're going to continue to fall down, but I'll be interesting to see if this moves back up to first of all, I think we both agree this has got to hold the 200-day.
Yeah.
Right. Is that fair to say?
Yes. I would say that it has to either close back up above that some point this week, or we're going to see more pain for sure.
So if we just operate under that assumption that it could hold above that, I wouldn't necessarily be confident until it closes above the 50-day, because I could see this coming to the 50-day and then coming back down. So I think the argument is like, maybe keep it tight. Like that's what I'm doing, is like, I just got to keep it tight and almost pop in. Like if I really want to do something, like keep my stops tight. And if I miss out on something, I miss out on something. But until it clears that 50-day, for me, I'm bearish on the market.
Yeah.
But for the year, and I've said this, the second half of the year, I think is going to be very strong. But man, this to me is setting up as like potentially a fake out.
Yeah. There is a lot of fear I'm seeing in the chat as well. So I just kind of want to address this. So, and this is a question we get all the time. And no thanks to the Big Four. Appreciate you guys representing all of us. And you know who we're talking about on YouTube. That love to throw around the term stock market crash all of the fucking time. And it drives me absolutely insane. So first of all, the S&P 500 isn't in correction territory. Neither is the Dow. The NASDAQ is, and for a lot of good reasons, right? We've seen the overvaluation of a lot of tech just get way ahead of itself. And so, we're seeing that correct. And that in and of itself is still in correction territory. Let's take another look at this chart one more time. Okay. Take a look at another. You are here. Okay. This is where we came from. The bottom of 2020, and you're right here. So like, as painful as this has been, you got to realize that there is a potential for this to continue to come down here. And like, that could be a crash. Like if this happened next week, we saw this come down maybe to like 390. There's plenty of levels in which this can come down to. The SPY could even come all the way down as low as 340. And I'm not saying that will happen, but that would indicate a crash. But this right here, that we're just barely touching the surface.
Tell it, Brad.
And like, that's what drives me crazy about a lot of the YouTubers out there that continue to just talk about crashes all the time and have no idea what the fuck they're talking about, because we are still in correction territory, and that's only with one index. The other two still have a little bit to go before we even start talking about that.
Yeah. And yeah, I agree with that. And that's kind of like, to my point of what I'm trying to make is like, I think now more than ever, it's extremely critical to keep a close eye on things, and also to really hammer out your plan before any of this happens. I think you got to kind of play out all the scenarios and say, okay, if X happens, I'm going to do Y, right? And so in the beginning saying this isn't 2020, this isn't, okay, we're down nearly 10%, I can scoop up whatever I want. I think you got to be a far more intentional moving forward, at least for the next 3 to 6 months, because and maybe cut bait on some things that doesn't work out for you. But exit strategy and sort of like foresight, I think, are going to be of critical importance now, because I don't know what the market's going to do.
Yeah.
But I know that what that's saying is really questionable territory. And so I'm not here saying, oh, freak out, go crash. For me, I'm not averaging yet. I'm not selling out of anything. I got stops on certain things when they reverse trend. But as far as what I'm in. But like, I'm not yet ready to deploy my capital that I have on the side that I've been waiting for, because I just think that there could be more pain to come potentially.
There could be, but there are stocks that were undervalued that are now ridiculously undervalued, and that's the approach that I'm taking. And granted, yours is much safer, so mine's much riskier. I'm in United Healthcare. I'm in Microsoft. I bought Spirit Air Systems. I even got some Rocket this week because that was crazy.
Rocket.
So like, there is some stuff out there that just makes no sense. And this isn't me shouting at the market, but like, it's just so undervalued that I'm like, how can you just not think about at least nibbling here? So I do have probably a lot more exposure than I would be happy with, but nevertheless, I do have exposure to those because I think it is worth at least taking some risk on, especially if you got time on your side. Yep. If you do have that on your side, then looking for stuff in the market that's just so far down, in my opinion, makes at least a little bit of sense. It doesn't mean that you have to go all in, but I think that there is some opportunity here. And another really good example of that was Microsoft. Microsoft closed at 296, which I got to be honest, I'm a little bit worried about. But as long as it's hanging around that $300 mark, I'm going to feel much more safer about that, especially going into earnings. And getting into good quality companies that have gotten beaten down makes a ton of sense to at least start nibbling off a little bit.
I think that's very well said. I agree with that 100%. Definitely not time to be like, I have no interest of being totally out of the market.
Yeah.
And I think, everybody wants that next big thing, and they want that like speculative stock that's going to go off and go up 300, 400%. Like, now to me is the time to just look at like really great companies that are undervalued, that won't go anywhere regardless. And you're talking about fundamentally, like we saw Goldman Sachs move down off of earnings that didn't really impress. But you mentioned Rocket fundamentally. But you name any of the big ones, you look at Costco, you said Microsoft, Apple, Amazon, Tesla, like any of these, and Tesla's even in a little bit of a different boat, but like any of those big ones that we know are going to be around 10 years from now, they're on discount, and they may get further on discount. But this is one where, like, when you say nibbling, I think that's a great position to be in, because you got a little in, and then you're scaling, you have a starter, and then you could potentially add on when the trend changes, because we've talked about companies like Rocket. Even if you miss a 10% move up, it's still got like, honestly, 100%.
It's ridiculous.
Upside from there. So
they're at 5.5 times next year's earnings, which is mind blowing. Mind blowing.
If there's no reason in my mind to be really screwing around with tech spec yet. We've talked about value. This is going to be the year of value stock. And as we move along, it's becoming more and more apparent, value stock. And that's a great place to be, because value typically are the ones that's sticking around. So guys, let us know what you're looking at. What's on the dip? Ford's one we love. That's fundamentally looking really good right now as well. I'm still in it. Brad's still in it. Let us know what you're in.
Ford has
or
earnings,
what you're looking at.
And Ford has earnings in 2 weeks. I don't plan on selling anymore. I sold 75% of my position, which is and that 25% that I have left is still a giant part of the portfolio.
Yeah.
But I'm not selling anymore. Like, I've already taken enough.
And give us that thumbs up. We got 133 people in the house. Give us that thumbs up if you're enjoying the content. Alexa, sold my Rocket at 2080 over a month ago. It's at 1292. Was it at 2080 a month ago?
About that. I don't think about a month ago, but
I thought it was
in the summertime, maybe.
Yeah. But
oh yeah, no, it wasn't at $20 until
it was like last
April.
Yeah.
The last time it was around $20.
Which I was in as like our crew made money on that. That was one of my top 5 winners of last year.
Short squeeze, baby.
And I think we see this. We could see something similar this year. Maybe not to the extent of the squeezes we saw last year, but definitely really good returns for a company like Rocket.
Matt Dix brings up a good point. Puts in PayPal there that hit 52-week lows just last week. That doesn't make a whole. I mean, from a multiple standpoint, it got a bit ahead of itself, but now that seems like a good screaming buy too.
Sorry, I'll pull that one up. I just missed that one.
I got it. There it is. He's got Square.
A
PayPal.
lot of people are talking about Teladoc. What happened with Teladoc?
It's just gotten beaten down, and really, I think a lot of people are talking about Teladoc only because Cathie Wood. It's their second largest holding in the ARK ETF. But that's still really a terrible stock right now. Hit 52-week lows on Friday, and it's not looking great. It's not looking great. And if I look at what do we have here? I don't know what their sales multiple is. I'd have to look that up because they're still not making any money. And so the potential here is great, by the way. I'm not saying that Teladoc is a shit company and it shouldn't be bought up. It's a fantastic company. And if there was a acquisition target, this should be it. I think that as crazy as it sounds, and it's never going to happen, but I would love to see Apple buy Teladoc. I think it would make a lot of sense. Apple's getting themselves into telemedicine. They're working their way into the EMR systems. If you guys aren't familiar with that, it's a electronic medical records. So like that is where Apple is headed. This would make a ton of sense for Apple to actually spend some of the money that they have that they refuse to spend on something like this. This would be huge for them. But as far as right now, there's no reason for me to consider buying them just because of the multiple that they're at, and they're still very overvalued. What is the market cap here? 11.67 billion. I would say if it came below 10, maybe 9 billion, then maybe it would look attractive to me, but I still think it's a little bit overvalued.
I don't think anybody needs to have scarcity sort of syndrome with tech spec, with crypto, with any of that. I don't think you need to like try to catch the bottom. We always talk about how dangerous that is and the losing proposition. Like you don't need to fear like missing out on this. You'll get the opportunity. Like you'll get the opportunity on the Teladocs of the world. You get the opportunity on the cryptos of the world, like all that stuff.
Yep.
I want to say Mad Dix, good stuff today, Mad Dix. You're on fire. All Cathie's buy is a short for me. It's ridiculously serious. Listen, I have this question to you. Is Cathie Wood Warren Buffett, what Warren Buffett was in 2020? Is she that this year?
She was that last year and maybe this year. Because, well, she hasn't sold anything and then it just rips right back up. Like Warren Buffett royally shit the bed in 2020. Like, I don't know what technicians he had working for him, but they all should have been fired. And I don't know if Cathie Wood has any technicians working for her because she just doesn't care. She just buys it and it doesn't matter. Like she'll buy it after earnings. She'll buy it right before earnings. It doesn't like, I really wish I could wrap my head around her strategy as far as like when she buys stuff, because none of it makes any sense to me. Like,
well, she's been clear on that. She's basically saying, hey, we have financial modeling on what we think of pricing modeling, and we could care less about what the current market conditions are, the short-term market conditions are, because we are looking at the future and we're saying the capital we have now, if it's below value of what we've modeled, then we're going to view that as a discount and we're going to keep doing that. And so it's painful, but I think she's looking at it that way.
I get that part of it. I just like,
she's dollar cost averaging,
but she conceded that she knew how volatile things were going to be. So like, if you know that like things are going to be crazy, why even bothering buying more Teladoc right now? Like if you know what happens when interest rates go up, and she's a very intelligent human being and she has a lot of intelligent human beings that work for her that know this, and everybody knows this. Like, why not just like sit on the sidelines for a little bit and kind of let the dust settle a little bit before you try to catch the falling knife like multiple times in a row? I mean, we've seen this now with Peloton, or not Peloton. We've seen it with DraftKings, Palantir, and with Teladoc, a lot of the other ones. That's the part that I'm still trying to like understand.
I would argue that, and I don't know the answer, but I would argue that she's literally stuck exactly to her thesis, which is I'm not like I'm not trying to time the market. So like a long-term investor
Yeah.
wouldn't look at rate hikes and care right now. They would be like, man, it sucks my account's down, but I'm going to continue to dollar cost average. And I think that's the difference between her and a lot of other fund managers, where they're essentially like, all right, we're going to play these factors that are going on. And I think she's just saying, when the move happens, I don't want to try to time the move. I want to just be in.
Sure.
So
Yeah.
I think that's the argument. And so if you look through that lens, she's literally like treating it exactly like a long-term investor would be. When she's out on a stock, she's just totally out. It like certain stocks, but when she's in, she's like, okay, these are discounts, and we're just going to continue to add to it.
She was right about Rivian, at least.
What happened with Rivian?
She said it was overvalued when it first IPO'd,
Yeah.
and that's now below its IPO, I think, price.
Yeah, and like, even if you didn't like Buffett, he still performed really well, where he didn't like his moves or not.
This year, he didn't in 2020. He lost to the S&P big time.
Well,
And he hasn't historically over the last 10 years done really well as far as
I'm pretty sure 2021 he did, or he didn't.
and
He didn't
20
outperform
I haven't
market
checked
2021?
21, but 2020 he definitely did not.
So I mean,
20 this year, he's going to crush it
yeah, I mean,
because everybody's moving into the banks and value, and like that's
so, and he's the same way. I mean,
yeah.
you know, so again, like, you might win 1 year, like you might like laugh at Buffett or Kathy Wood for 1 or 2 years or whatever, but in the end, they're going to freaking win, because it boils down to, and this is sort of what we always talk about, like, we're trying to get a little bit of juice, extra juice out of the squeeze. They just have so much capital. Like, as long as they just stick to it, they're in quality companies and they're going to have their day. You know, it's just, can you handle the pain? And, you know, we'll see. We'll see how that works out.
It looks like they might have come in line with the S&P last year. I'd have to double check. They were awfully sideways for a while, but this year they really went crazy.
Yeah.
It's early yet, but since January, it's been full breakout mode.
I just want to call out a couple stocks people said. So Teladoc at this level is ridiculous. Look, there's a ton of stocks at this level that are ridiculous. That quote goes for a ton of stocks.
And there's a ton of stocks that are at low levels that actually make money, which is why I bought Rocket. I know it sounds crazy, but I bought Rocket because they make money and their value, they're trading at 5.5 times next year's earnings. It just, at some point, this has got to get bought up.
Yeah. And like, not to keep beating Teladoc a dead horse, but I think Teladoc is a perfect example of what we're talking about. Tech spec. We've talked about
Roku as well.
Profitability and lack of profitability. Like, I would just question, are you saying it's silly based on fundamentals, or are you saying it's silly based on what the stock was at in 2020?
Yeah.
When all tech spec was on fire. Teladoc, again, let me be clear, I love it for a long-term portfolio. It's going to eventually have its day, but its lack of profitability, rising rates, there's a lot of things working against it. And so it's like looking at a stock at 52-week lows and being like, man, it's like got so much room to run. Well, if it's in a downward trend, that's tough. Like, I'm not saying you can't get into it, but you got to kind of forget about what happened in 2020 and just look for the story for what it is now. But I do want to shout out a couple stocks. I asked people this, so I want to make sure I shout out the people who talked about the stocks that they're getting into. We have we have obviously Tesla. We got,
who has earnings this week?
Tesla has earnings on Wednesday. People got Teladoc, Square, PayPal, all FANG stocks. Yeah, any FANG stock you can look at right now.
Even Netflix. Although if I'm looking at streaming, if I'm looking for a streaming play that's been undervalued, I have Viacom.
Oh, okay.
Viacom, their multiples are pretty low still. Market cap's low, and they actually got beaten down with Netflix. Netflix, I still think is a good buy. We're at levels now on Netflix that we haven't really kind of seen in a while. So 2018, I think was the last time we saw it come down this low, and I think it was its worst day. It was its worst one day. I guess crash, whatever you want to call it, in over a decade. So it was just a crazy day. So there is an opportunity, I think, with Netflix as well. The overreaction was ridiculous. But I would say that Viacom is still undervalued. VIAC is the ticker symbol. I own that.
Is that Paramount?
It's CBS.
Who owns Paramount Pictures? That stream.
Paramount Plus. I think that is Viacom too. Yes.
Okay.
Sorry. Yes.
I just want to say for the record, I think Paramount is maybe the most overrated streaming service right now. Until you give me something
Overrated?
yeah, overrated.
Disney Plus is probably overrated.
Disney Plus is overrated? How do you say Disney Plus is overrated?
Just given the way that it's reacted. Every time they've
No,
talked
no, no.
about
I just mean as a service, like as a consumer.
what makes it overrated to you?
Disney Plus has all the kids on lockdown. So like as a
YouTube Kids has a lot of kids on lock, or is that underrated?
YouTube Kids is underrated.
Okay.
But Disney is properly rated. Like I
Okay.
don't think Disney's overrated. I think Disney's delivering new content. Until what is it called? It's not Yellowstone. It's Yellowstone, right?
It's Yellowstone. They have 1816 or something that's out now.
Yeah, it's just Yellowstone.
Okay.
Put Paramount on the map. Paramount
Okay.
Plus on the map.
But
It's like Apple Plus and Ted Lasso.
Yeah.
I love Ted Lasso. You can't tell me that like Apple Plus is overrated until you actually deliver like consistent content. You got to deliver 4 or 5 home runs.
well, Viacom isn't just Paramount Plus though. I mean, they have
I'm
sports and everything else.
you're hooking on Paramount. You said Viacom. I'm just saying
Oh, okay.
Paramount Plus is the most overrated streaming service today because of Yellowstone. They need a few more hits. Apple Plus is second behind them as overrated. So I'm interested to see how they move, but like making good content, original content, and hitting home runs is like more challenging, especially now with the competition.
Yeah.
Because I know this Yellowstone is supposed to be awesome, but like
It is awesome.
what is the next thing you got? And Apple Plus is literally Paramount Plus is doing the same exact thing. It's following the same footsteps. You hit a home run, you had hype, you had a nice punch, but look at Apple Plus's numbers. It's not seeing the same growth because they haven't been able to follow up. So Paramount Plus overrated in my mind until they get 3 or 4 more content, proving that they can identify consistent content. But Viacom is fine. I'm not saying that that's not a buy because
Rudy Brown says Netflix and Roku's overrated.
Roku's model is very smart. I don't love Roku, but I think their model's very
Yeah.
smart.
I don't know if I would say overrated. I don't know if Netflix is necessarily overrated either.
No, Netflix isn't overrated. Netflix is properly rated.
Yeah, I would say properly rated.
I'm not talking
Makes
about
sense.
the stock market and what I'm just saying as far as like the hype around it and like where it will
viewership and stuff
be.
like that. Like Ozark just came out, like the
Yeah.
4th season of Ozark just came out, and people have been. I mean, how you can name dozens of names that like blew Netflix up, right? Whereas
Yes,
right now,
That's my point.
the streaming services are so young that there's only like 1 or 2 names that you can attach to each one of them, whereas Netflix just has a shit ton of them.
Netflix,
And
Disney
and
Plus, and HBO Max is the one that's actually looked like continuing to follow up with good content. So like they're the ones that are like kind of a sleeper right now.
I've heard lots of complaints about like their platform in general, like using it and stuff like that. It's not all that
I
great.
haven't had any issues with it. I mean, it's similar to me to Hulu in the sense. Listen, and it's not my favorite. I just think they have very good content.
Yeah.
It's similar to Hulu, and it's like to me, it's not intuitive. But
Okay.
but like if you know what you're looking for, it's there. But as far as like you take a Netflix, it's like Netflix is really good about their algorithm giving you stuff that you might like.
Like YouTube.
I don't think HBO does a good job of that.
Yeah.
But you look at, to your point, like Netflix again isn't back. They have had a ton of home runs. I mean, you could go through the list of the home runs they have. But on top of that, look at what they've done with comedy. Like,
yeah,
no other streaming has gotten to even close to sniff the levels they've gotten, and how much money they're putting into speaks to, I guess, the money it's bringing in if they're investing that much money into like the Chappelles, the Kevin Harts of the world. But it's going to be really interesting to see how the streaming wars play out. But if I ask you in 2025, who's going to be number one? Who do you think is going to be number one?
2025. Like
Yeah, 3
who
years from now.
like subscribers? Who has the most subscribers?
Yeah. Who's leading the subscriber? So not growth, but just who still has the most subscribers.
I'm still gonna go with Disney.
I think it's either Disney or Netflix. And I think Netflix could still be a number one. But it's clear that their growth is slowing down. And that's the issue, guys. Somebody earlier said something about 220 million subscribers. That's great, but you have to show the growth to be reflective in the stock market.
Yeah, and their projection for growth, I think, was like 2.1 or 2.4 million subscribers this year. And the expectation was somewhere around 5. So that's a really big
Yeah.
adjustment. And so the growth is certainly slowing, and you're only going to be able to reach. I was talking to some people about this weekend, and they were saying like the 220 million subscribers they have could most likely be 220 million households. So some people make the argument of like there's
More
X amount of people in the world, but it's like how many households are there like that they can kind of cover. So there's a little bit of both sides of that argument that I can kind of see.
Yeah.
But there is, I think, at some point Netflix is just going to become like this value company, and I don't know how much growth we're going to see from them in the near future. I would argue that Disney has a much broader audience that they can bring in, and that's why I think that they could potentially overtake Netflix in the next 5 years, as far as that's concerned, because of their content and who that they bring in. It's not just kids, even though that's like a big part of it, but they also have content for adults as well. I mean, the Marvel franchise is just insane, still blowing out records. So I think that side of it can bring in a lot of subscribers as well. So I don't know. I mean, I think that Netflix in the next 5 to 10 years could start to be viewed as a potential value company.
That's a great point. And I don't think that would be a bad thing.
No.
Netflix, the competitive advantage they have is the international exposure. So
yeah,
really, other than Disney, the other ones are going to have a tough time competing from an international perspective, and they can take shows. We've talked about Disney's challenges. They have to create their own stuff. Netflix can just buy shit, right? Money Heist, they just bought and revamped it, or revived it. So they have some competitive stuff. Yeah. And they do that a lot. I mean, that's kind of been their MO until they started creating original content.
Ozark's amazing, by the way.
It is. I'm excited to get back into that. Detra Ed said they need another revenue stream. They're trying to do that, I think, with the gaming. So we'll see how the gaming works out. They clearly know that they have to do. But to your point, I haven't thought about this until you brought it up. 220 million. Let's just say for every subscription, there's two people, like that person and then another person. Right?
Yeah.
So let's just round that to 500 million. Think about the people in the world that have the capability of paying it.
Yeah. Like I have 4 people on my account.
And I do too. I have like 3 or 4. So like when you think about the entire world, and like if you take access out, you could probably cut half of the world and they just can't have access to it, right? Just because they're means.
Yeah.
Like, so you cut out half the population of the world, and then you like think about how many people have it and then how many passwords they're giving away. And it's like, they need to probably, like, they're not going to see the same growth, because even if they have 50% growth, that's, you've reached sort of the critical mass population in like 2 years.
Yeah.
So they either need to Detra's point, like, or Detra, get into new things, add new revenue streams, monetize. I think they do a poor job. I feel like they could monetize around their series better, like gaming for sure, but even like merch, like I feel like you can do things. Kids.
How many people would buy a Squid Game shirt?
Exactly.
Yeah.
Exactly. And like kids content, like I think there's a lot to be had there with kid content for there, and that potentially could open some things up with like toys and stuff like that. So there's ways, but I don't know if but that probably still leans towards the thesis of value stock. So we'll see. In general, Netflix. Oh yeah, Netflix. Squid Game was one that was an existing content that they bought. They bought.
Yeah.
So that's kind of their MO, and they have the corner locked in on that. Disney lacks any amount of diverse content.
Are you sure? Here's the thing. Disney has all kinds of shit that people don't even realize.
That's true.
They have
that's true.
Sports, ABC, which they are also getting into sports betting. Don't know how many people actually know that, but they are. They also have like channels like the National Geographic channel, which there's not kids that are attached to that. The Will Smith
talking about Disney Plus.
Yeah, that's Disney Plus owns the National Geographic channel.
No. But like when you talk about sports, you're talking about ESPN, right?
Yeah, but the ESPN Plus.
Yeah, I know. I think they're just talking about specifically Disney Plus. But keep making your point, because that's a good point about Disney stock in general. And maybe I'm wrong.
Well, I mean, when Disney reports their subscribership,
It's
I
all of
think
them.
they include all of them.
Yeah, they-
correct.
they-
Yeah, so it's Hulu, which is sports, ESPN Plus, which is also sports. Hulu also has regular content as well. But then you have Disney Plus, which has a whole plethora of content, which includes things like the National Geographic Channel and all kinds of things that you guys might not even realize, which is also creating their own original content. That Will Smith special was incredible.
Yeah.
And I know we're getting a little bit into the weeds here, but that just goes how deep the content is for Disney and Disney Plus, that people might not realize that they've watched shows that are attached to that, and they didn't even know it.
And to be clear, if I'm not mistaken, Disney does report Disney Plus subscriber numbers, but they also report their numbers as a whole in their earnings. If I'm not mistaken, I'm pretty sure that's what they do. But to your point, when you say Disney doesn't have diverse content, I think that was their logic. Like, Disney Plus is a targeted demographic, and I think that's exactly why they acquired Hulu and ESPN. And you're seeing the moves they're making. You mentioned National Geographic. Like, those moves are because they realize we want to target other demographics.
Right.
And so it's smart. You don't want Disney to start expanding into everything. It's smart to have these other platforms that are handling demographics, and then you could keep Disney Plus what it is, which is sort of like the golden child in general.
Yeah.
I want to answer a couple questions, couple that I don't want to slip. Is Rocket earnings not official, but it should be middle of February should report Rocket earnings. I think they'll announce it in the next week or so. So definitely that's going to be one we're going to be watching. And then this question, because this is the second time somebody said it. Milton Williams, crazy question. You think SoFi stock might do great since the Super Bowl is played at SoFi Stadium? I made a comment on that, and I definitely want your perspective. I'll repeat my comment, which was, my response to that is, Milton, oh, like the short answer is no. A name on something, no, I don't think so. But I want to amend it a little bit. Potentially, I don't know how it works with them being like, I'm sure we're going to see a lot of ads from SoFi.
Yeah.
And I'm not sure if there's like breaks they get on ads or whatnot, but obviously advertising, and like that's the biggest day for advertising and commercials. The amendment is they may make a big push to get advertising on the Super Bowl, and that may turn into new accounts because they have this new charter. So I wouldn't be surprised in that. So in that sense, I think this could be really, really big for SoFi, but I don't think the fact that their names on the stadium and brand recognition, I think there's a very convoluted path you need to take to make that argument, like brand recognition, and it'll be like on somebody's mind. But the reality is, no, the fact that it's held at the stadium, I don't think that makes a difference in helping the stock. But advertising during the Super Bowl could benefit getting new accounts open. And that's all that's going to matter. Just like with subscriber growth in streaming, all that's going to matter for SoFi for the near future is new accounts, period.
Yeah, I agree with that. And you know, the only wild card I'll say is Wall Street Bets. We've been looking at that, and it's been becoming increasingly popular in Wall Street Bets for a lot of reasons. It was one that was a SPAC of Chamath Palihapitiya, and it's kind of remained on a lot of people's radars as far as Wall Street Bets is concerned. So it's gained a lot of popularity since they got that bank charter. So that's the only other thing that I could think could be the wild card in that. Yeah. But we saw that Rocket Mortgage was hosting the Super Bowl last year. Yeah, last year, and it didn't move the needle at all. So I think that's more of a long-term approach, is getting that exposure to people, getting eyeballs on the name, but I don't think it's going to give you any kind of immediate move to the upside.
Yeah. So we'll definitely keep an eye on that. And guys, we, especially on, this week, we have big earnings coming up. Which earnings are you most excited about this week?
I'm most excited about Microsoft, Boeing.
You need that thing to get back over 300.
I need that thing. Yeah. Yes. I need Boeing is one that I'm also excited about.
Yeah.
I know that it's a lot of people not on their radar, but I'm pumped for that because I think industrials are going to do well. And then Apple, I think obviously Tesla is going to be one that has a lot of eyeballs, but I try to find stuff that not a lot of people are looking at. Not that they aren't looking at Apple, but I think with all the other stuff's going on, it's like, oh, it's just Apple, whatever. But I think Apple is going to be very pivotal because we've heard a lot of headlines in December about how supply chains are not doing well and they're having trouble getting product out. And then they flipped on that. There's articles all over the place. And so nobody knows. So I want to hear from them specifically. Can we clear the air? Are they fine? Is demand great? Are they having any issues getting the product out? That's what I'm kind of excited about this week. What about you?
I would say similarly Boeing, only because I have Spirit.
Yeah.
And so I'm hoping for a sympathy on that. Tesla, man. I think Tesla is outside of Apple. I think Tesla has the highest likelihood of like pulling this whole ship forward. If Tesla reports, like, people have this ability to forget everything else that's going on.
Yeah.
And just the hype, I think it still has that ability now. And if they can really provide a really strong outlook, I think that impacts so many other industries. And as Tesla goes, I think a lot of things go. So I'm excited about Tesla just to see what it delivers. All eyes on Tesla. We will definitely be live on Wednesday after hours for that one.
Oh, yeah.
But Monday through Thursday, this week we're changing it.
Yeah, we're doing a little bit of a change. I'm glad that we waited till the end because now we have the largest amount of people that have been in here. Or they're close to that.
We have 150.
Oh, okay.
Yeah, we were at 150. So hit that thumbs up.
Hit
people.
the thumbs up, hit the subscribe if you're not subscribed already, hit that notification bell, especially for this week because we're changing our live stream times. And I know I'm going to get a ton of DMs because nobody was paying attention or they didn't watch tonight's show. But 3:45 is our new time. I think that the reason we decided to do that was because we get into earnings and then it's kind of like, oh, we've already been live for an hour and we're obviously exhausted from just going through the stream itself. So I think going live at 3:45 and staying on till like 4:45, 5 o'clock, depending on how things develop. I said depending, but the reason we did that was because so much happens after 20 after 4:30. Some of the earnings haven't even been reported yet until 4:30, and we're kind of just like, oh, they beat earnings and we're out. Tesla's a really good example of that because they report later. So we're going to go live at 3:45 p.m. Eastern time tomorrow. Again, make sure you hit that notification bell so you get notified when we do go live in case you forget. If you show up early, it's not like it's going to be a big deal. You'll just be hanging out.
Yeah, definitely be here tomorrow. Every day this week is going to be an earnings reaction. So every day is going to be awesome, going to be ramped up. But tomorrow particularly, we're going to be discussing earnings more in depth and what we need to see, what our strategy is for earnings. So we're going to break down every day's earnings and sort of pick our big winners for the week and what our expectations are. So for sure, if you're going to attend any live stream, be there tomorrow. As Brad said, 3:45 Eastern time.
Shout out to Rudy Brown and We Trade HQ for keeping us updated with the score. 17-14, Kansas City.
All right, guys.
Close one.
We will see you tomorrow.
Bye.
Hit that like on the way out. Bye.